Let's bring on board Andrew Holland, CEO at Ambit Investment Advisors, then, and chat about which way he thinks the market is headed. Andrew, hi, 7,500 already here, 25,000 already on the Sensex. Do you think we're going to make a dash at, say, 7,700 before the budget?
Yeah, it could be possible. I mean, you've had, the European Union, throw 400 billion euros to add to the liquidity pot globally. So, and I expect Japan to do some stimulus soon. So, it could keep markets all heading upwards globally. Although I do feel that after Japan stimulus, that we're going to start worrying about some bubble, whether that's in the equity markets, i.e., a technology kind of problem in terms of like a dot-com bust potential happening there in the US, or the bond market. It's going to be one of those. It's going to be something we don't like globally. But every day I hear that the finance minister is mulling over some new incentive for a sector. So every sector, every company seems to be going to benefit from the budget. So I'm sure we're going to have a nice sort of run ahead of that. Maybe after the budget's over, we might have a more sobering effect, because surely you can't benefit every single sector. Surely it's got to be a fiscally responsible budget. Otherwise, I think it would scare foreign investors away. So let's not hope for all that we get, because what we get might not be what foreign investors are looking for. This is, I think we're aiming for everything at the moment. We've got 3 to 5 years of good solid growth ahead of us. Let's not try and get it all in the first few months of the government. So I think sentiment's running ahead of itself. It's natural. It's okay. But I think everything's being dragged up. All the winners. Everyone's a winner. So I think over the next 3 months we'll start to differentiate the real winners from the also-rans, and I think that's the one of the things that we're concentrating on. Because we think it's a minimum 3-year bull market that we're going to be looking at. But not every company is going to be a winner from this.
To separate the men from the boys for us, which one do you think, pre-budget, post-budget, 6-month, 12-month horizon, which are the men that you would really want to bet on?
See, we haven't really changed our view since last October, which was to move from defensives towards cyclicals. We think cyclicals, i.e. industrials, utilities, auto components in particular, and the material sector, mainly metals, will be the main beneficiaries. So we're sticking with that. We think there's a lot more value to be had in these sectors. We're looking around at new themes which we think will play out over the next 3 to 5 years, and that's something where we're just doing a little bit more work. So I'll hopefully be able to talk about that more in July.
On oil and gas, Reliance is in news today, ONGC too. If indeed the gas price hike comes in a month's time from now, how big a positive?
I mean, it's always been a positive, and hopefully that will keep the sector moving ahead. So, but how much it gets priced in before the event we'll have to wait and see. But we've been waiting for the gas price hike now for the last 6 months. So there's no new news in it, but obviously it's another way of saying that the Modi government's stepping forward and doing the right things. And I think that's what the market's liking in terms of the action points already taking place by Modi and his ministers. So step in the right direction, I would say. I think everyone knows the implications of a gas price hike.
You mentioned about you liking cyclicals as a theme. You're continuing on that investment theme. And I think fundamentals may start supporting, because L&T's results, anything to go by, things are looking up. Their commentary was very positive as well. Cap goods as a pocket, despite the run-up, do you believe there is merit in investing?
Very much so. We're still at the very beginning. I mean, I just want to highlight a few things here. One, I haven't increased GDP forecast. We're still looking at 5.5% for this year and 7% the year after. But the operational gearing in India is something I've spoken to you about before. Is huge, and so the earnings are just going to explode across India. So what we're trying to do at the moment is is try and look through this, because it's quite easy. You talk about all the share prices rising. So we have to fast forward 3 years and think about how India would look. And, you know, with that hindsight, if we were 3 years on, what should we have had the foresight to do today? And that's where we're identifying, you know, many different themes. But one central theme to that is obviously it's going to be a domestic India story. You know, if you go back to the last bull market of, you know, say 2002 to 2007, you know, the one thing that, you know, foreign investors would cite as India's story was the outsourcing story, and that's what really, you know, helped India's growth story then. This time around it's going to be a domestic growth story, and there's going to be one mega theme which we're working on, which we think will play out over multiple years, multiple sectors and multiple stocks, and that's really where we got to kind of highlight. So I'm not thinking so much about the index. The index will rise, and that's fine. But you're going to make a lot more money outside of the index, and that's really where we're focusing our attention at the moment. And you know, I still think that the defensive sectors like IT, consumer, and pharma will be derated over the next few years. I'm not saying that the share prices will fall, but as earnings move up, their PE ratio will come down. So, you know, an emphasis, even though it's got its own problems with management at the moment, at 14 times is probably the best you're going to see it in terms of PE multiples. So there will be a derating of 30% of your index over the next few years as well. So, you know, I'm not so gung-ho on the index as such, even though it will move higher.
Andrew, do you continue to like names outside the index, like you just pointed out, Sadbhav Engineering and Ashoka Buildcon? Are they still a hold?
Yeah, those are not names I've mentioned. I mean, Barrett Forge is a name which I've spoken to you about many times, and you can see in their results the operational gearing of just, you know, and the benefit of improving orders, you know, in both North America and Europe, and that's really before, you know, India Inc. in terms of the growth story starts to kick in. If you throw in 2015 financial gearing, I think you understand what I'm trying to say there, is that the earnings story in India and the explosion of earnings is going to be huge, and it's going to be across many sectors, but at the moment we're continuing to focus in on the 4 sectors I mentioned, because that's where you're going to see the immediate gains.
You know, I'm just using Amtech Auto as a reference, or Bharat Forge as a reference, because you like the stock. Auto components, because they are largely an export-driven story. If you look at any of the companies right now, the large ones in particular, are you bullish on the space at large?
Yeah, so, you know, in terms of our operational gearing theme, the reason we picked Barrett Forge, for example, was because of its offshore operations. And those would benefit earnings very quickly, which is what we've seen in the past 2 quarters. Now, as India Inc.'s you know, GDP growth starts to move towards 5.5% and then 7%, then obviously, you know, you're going to see growth domestically as well. And that's going to further improve their manufacturing capacity, say from 70 to 75%. Again, that's just a huge bottom line profitability earnings story for them. So, you know, this story is not going to go away. It's going to be multiple years of huge earnings increases for the auto component companies, and in particular Barrett Forge. So this is why we like this, you know, this kind of story. Anything to do with operational gearing, we think there's a great story, and auto components is one of them.
Andrew, the other basket really, and it's not technically another basket, but the PSU oil and gas space that I want to focus on. It need not necessarily mean only ONGC, because the oil marketing companies pretty much come there too. And I've seen re-rating from across the sell-side brokerages. What's your view out there? Are they good investment themes despite the run-up that we've seen? Because we're still waiting for the measures to come about.
Yeah, listen, I think for the headline stocks, the Reliances, the ONGCs and the oil marketing companies, it is good news. And that's where you're going to see the immediate you know, share price performance. We're trying to look, again, and what I'm trying to say to you is that we're looking beyond what the headline news is and what we think India is going to look like in 3 years' time. And we think there's a different theme that we're going to play in the oil and gas sector, which will underlie the growth of India, but also within the sector. So, you know, I'm not saying that ONGC and Reliance won't continue to do well. They will, but we think there's other themes below that which will play out more strongly. And where there's a lot more value at the moment, and over the next 2 years, that will become the new theme. So, without trying to say what that is, don't just look at the top line, the headline companies. Yes, you will make money in short term, but there's a bigger play to be had over the next 3 years. So we're just finalising our homework on some of these sectors and companies, and in July I'll let you know more.
Andrew, what's the view on metals? Because quite clearly they've been, the flavor of the month. Is it just a trading move, or does it seem like there's genuine investment money now finding its way into metals?
I think it's a combination of obviously global factors. With all the stimulus, this is going to have a helping hand in terms of the commodity prices. China's seems to be holding up despite what we all think. So I think that globally it's helping the material sector. I think for India, again the operational gearing in all of these companies is huge, and I think share prices may run ahead of themselves, ahead of the budget, and that's fine. But I think this is the metals, particularly Hindalco and Tata Steel, stocks you just have to have core in your portfolio and just hold on to them for the next 2 to 3 years, because the operational gearing is just going to be fantastic, and if you get financial gearing coming in too, again that will help the earnings story going forward.
And it seems that the Road Ministry is now preparing a list of 11 projects which are going to be awarded soon. Any of those infrastructure plays that interest you, because they too are seeing a fair amount of run-up?
Yeah, I said previously, I think every sector will have, and saw some good news or potential good news, or the finance minister mulling this, or some minister mulling that. At the end of the day, we're kind of thinking that everything's been solved in one go, and we're actually running at 7.5% GDP growth. There's a lot of heavy lifting to be done. The good news is that Modi is delivering on some of his promises already, and that's keeping the momentum there. But I don't want to get carried away and just run into every theme and say this is going to be a great new theme. It's not going to happen that way. It never did in the past, and it won't happen in the future. So I think we have to be a little bit careful. I say everything's going up at the moment, that's fine, but I think we'll start to differentiate the good from the bad, maybe after the budget.